first of all, to kick off, your view on China and the China reopening and what this means for the global economy and for markets.
In general, there's been slow or reservations about both the degree and confidence with which the Chinese economy is reopening. And I mean that both in the sense of borders reopening, domestic borders and out of lockdown as well as international borders, but then also a sort of reopening of economic activity through confidence transmission and the like, and more predictable policy. We feel like this is a very, very authoritative U-turn. But what I mean by that is they, from every imaginable policy perspective, monetary, fiscal, regulatory, are being accommodative,
right,
and trying to engineer growth, animal spirits, et cetera, at a time when most other developed market central banks are being intentionally restrictive, tightening, or being pressed in that direction. I think where this will show up more clearly, and it has started to, but show up more clearly and with more follow through, is going to be in global markets, both top down and bottom up, that have exposure to the Chinese consumer versus don't. And I do think this is a consumer story. Think about just the way Starbucks might behave versus McDonald's. Starbucks has a bigger pound for pound presence in China. That's not a recommendation one way or the other, but thinking about how European luxury has a lot more exposure than low end apparel elsewhere, right?
Yeah.
And that's sort of a bottom up view, top down view. And we're also seeing this. It points to Europe and parts of EM outperforming the US.
Really? That's contrarian. Okay.
Well, I'm okay with that. I'm going to embrace that as a contrarian view. Europe has significantly more, both corporate exposure to the Chinese market on a percentage basis than the US does. Right. Both in the sort of real time sort of just parsing through revenue, and also on a capitalized basis.